Hey everybody, happy Wednesday, March 25th, 2026. Thank you, God, for giving us another day of life. Thank you, God, for waking us up this morning and renewing our soul, renewing our mind, renewing our eyes, our ears, our mouth, renewing our thoughts in you, Holy God. Thank you that we can follow your will today and all days. And the kingdom is yours, God. So glory be to God. Thank you for our daily bread. Help us run from evil and into goodness and into righteousness. I want to read a psalm that I was using today and reading today. It was Psalm 105. Give thanks to the Lord and proclaim his greatness. Let the whole world know what he has done. Sing to him, yes, sing his praises. Tell everyone about his wonderful deeds. Exult in his holy name. Rejoice, you who worship the Lord. Search for the Lord and for his strength. Continually seek him. Remember the wonders he has performed, his miracles, and the rulings he has given. He is the Lord our God. His justice is seen throughout the land. So it reminded me that whatever setbacks you have in your life, any difficulties that you have, we're taught to continue to sing to him and remember all the wonders that he's done. So when times are tough or when things don't go your way, just remember all the wonders and the good things that God has already done. And he's a faithful God. And everything that he does is for the good, and that his plans are greater than all of our plans. So everything that we think is bad, good, this, that, it's not for us to decide whether it's good or bad. God already decided, and it's in his kingdom, so it's good. All right, guys, let's get to it. Today I'm in the green. Today was a great trading day overall. We had our main stock. This one is on the rise right now. Wow, this one has gone up 319%. I'm gonna share my screen with y'all. Y'all see this? Okay, so this is Ugrow. It's a CBD oil company. I mean, they didn't really have any crazy news, but look at the way this thing is halting up. I mean, it's leaving crazy gaps. 24 to 26. Whoever shorted this is getting wrecked right now. The short float was short float was 5.63%. That's pretty high. When we get high short float, we see events like this take place. So what's happening right now is we're having they call them gappers. Everybody, because so many people have shorted this, it's currently gapping up. All the shorts are buying, and so they're fueling the run that this is creating. Wow. 319%, guys. This started this morning. I got involved at around 7:50. This thing took off and it's now $30. You made wow, 4 times, 4x your money if you wanted to on this one stock. This is the power of small float stocks. Some days you get just absurd moves like this, and so it's good to be ready for them. But this is a stock that I made 5 out of 6 of my trades, predominant amount of my money today. Um, get to it. So first trade of the day was BIAF. I had this on my pre-market watch list. So every morning, I would advise for y'all to do this as well, is to create a pre-market plan. Every morning for about 30 minutes, go to the pre-market, see what's out there, see what's moving, and create 3 categories of stocks: green, yellow, and red. Green stocks are the ones that have a daily bias that's bullish. Using the daily chart, you can tell we have a bullish direction and we have relative volume that's high. So let's look at Ugrow. I'm curious. what was the bias of this stock. So this stock that has moved so high, right? 300% in one day. What was the bias on this? So daily bias was actually bullish. So we're gonna use the last 5 days of of data. And in the last 5 days, what did we had? We had a large bullish candle, a small bearish candle, and now today we have a continuation. So if you had looked this a little bit more spread out, you would have seen that we are in a bearish trend. But recently, and what's most pertinent to our daily trades is using the last 5 to 10 days for making a decision on that. So if it's bullish on the daily bias, on the daily chart, and it's got the relative volume criteria, wow. Guys, should I trade? Now it's selling like crazy. Hold up. This is live. And we're live. Now it's probably halting down. Look, little halt blue sign is gonna come up. Yeah, there we go. I can teach a quick lesson about halts. Get involved. If you're in a trade and it halts to the long side, good. If you're in a trade and it halts to the short side, bad. One time I got halted out by Chinese stock as it was going down, and it took me for around half of my position. Never trade Chinese stocks. Do not trade Israeli stocks. Um, they will both take your money. In this case, this had looks like one, two, three, probably like four halts. I would say trade the first two halts and then get out after that because of how crazy they can be. But let's get to this trade for BIAF. So I had this on my pre-market. Um, I had this as a green, but in the future I will not have this as a green because we didn't have the relative volume needed. And look at all these wicks to the left side right here. So I was looking for an opening range breakout to break through these levels because it had a lot of a range if we broke through that pre-market high and beyond. Price action of the last several days looked like nice. We had a strong bullish daily bias. Let's see if y'all can. Let's see the daily bias of BIAF. Look at that. So I was looking at the daily chart and I really liked what I saw right here. That was beautiful. That's a great daily chart. We had a huge move up and we had the 200 MA supporting. So 200 MA supporting is great as well. That's really what we want. We want the 200 MA as a platform for us to bounce off of. But what I was missing here that I would not allow this to be a green in the future is that the RV, the relative volume, was less than 2 at the time. And I had a bunch of these long wicks to the left on the 5 minute. So we're going to add that to one big change for tomorrow. So green requires that relative volume is greater than 5 and the daily bullish, the daily bias from the last 5 to 10 days is bullish. Plus clean price action, as in no long upper wicks to the left on the 5 minute. So this was an opening range breakout. I did make money on it. Right here, I was looking for the break of this range right here as it was created. So this range right here was created. We got this. I could have entered earlier right here. So in an opening range breakout, we don't like to see this long tail doji that signals a lot of indecision. We were hovering close to the VWAP and the EMAs. What I would have preferred was a move down supported by this tail. This would have been our stop. And then we get in at a break of VWAP. Right here. So could have taken this, wrote it up. I got in right at the breakout. where I set my stop. Stop would have been set down here. Let's see what my risk reward was. And my stop was set around 60% of the initial move, which is around halfway of the initial range. So an opening range breakout, if you get in at the top of the range, you set it for the middle of the range, the stop, and then let's see what our target was. So I had a 1.5 risk reward. I'll take it. Then I got in again as we made this long lower tail, but on high volume that does indicate a reversal signal. Plus this is a double reversal signal. This is a shooting star doji with high volume. With VPA analysis, if you see high volume, especially on this type of candle, that indicates a clear reversal rather than continuation. I should have gotten out as soon as I saw that. Um, so 5 minute signals are to be trusted. So if y'all tuned in yesterday, a big change that I made that I would recommend to y'all as well is to only they use the 5 minute as your minimum execution chart because there is too much noise on the 1 and 2 minute, especially for low float stocks. And yeah, you're able to really decide on signal and confirmation candles using the 5 minute chart a lot clearer. So a big change for tomorrow is that I'll be trusting in the 5 minute signal candles to tell me if there's a continuation or a reversal. And if I see a shooting star with above average volume, I'm out of the position. So the best moves are the ones that have a clear left-hand side, as we'll see. Pay attention to the amount of large upper wicks. There was a lot of resistance. So that was the big thing I learned here, was to trust that reversal signal candle in the 5 minute. Overall, using the 5 minute has been very beneficial. I noticed today, like, my win rate is up to 80%. I followed my rules better. When I have way less noise on the screen, I'm noticing that it helps a lot better. So next we had RMSG. I had this as a let's see what I had this on my pre-market plan. Pre-market I had this as a red actually. I had this as a red, yet I still traded it. Why? I wonder why I still traded this. So this would have been a good high pre-market break to get into. Opening range break would have been nice. Yeah, that would have been a good opening range breakout. Um, yeah, I don't know why I had this as a red, honestly. We were in a clear downtrend though. We had no signs in the last 5 to 10 days of any sort of bullish activity. Yeah, the last 15 days were quite bearish. So this is why. So if I have a bearish daily for the last 5 to 10 days, that instantly relegates it to yellow or red category in my pre-market planning. Um, we were below all of the MAs as well. Yeah, so overall, not too many good signs yet. I still took the trade on a bull flag. I ignored all of my signals. One clear signal in the 5 minute, and something that I need to engrave in my head. Just I have to get in my head is that now that I'm working on the 5 minute, the signals that I'm getting are a lot clearer for decision making. And what I have right here is just a phenomenally large bearish trend candle. So on a bull flag on low float, it can work if we get the right pullback. It has to be like first or second pullback on the 5 minute. And we've got to see very specific types of candles on low and decreasing volume. So this was above average volume bear trend candle. That would immediately disqualify it from a bull flag or triangle strategy, like immediately. So that's a big lesson I'm learning for tomorrow is um so for the bull flag strategy, right? Immediate disqualification if it's a bear trend candle on large volume. And I'm gonna add that as well to. So here's a consideration note that I had. Do not enter 5 minutes showing a clear signal candle or a reversal. So if so immediate disqualification if we see a shooting star or a bear trend candle on above average volume. Here, volume is very important to take into account. Like that, it would immediately disqualify me from taking the trade. So I didn't have my rule here in place, and I can also tell you that the risk reward sucked. It fucking sucked. Um, risk reward, what 1.25 on a bear trend candle, not worth it. So here I didn't follow my rule. So the next three trades were phenomenal. It was from You Grow, We All Grow. This is the one that we just looked at that's up 300% today. This is a good lesson in greed. Like when you see a chart like this that continues to grow, you want to get involved. But once you hit your profit target of the day, stop trading. And especially in this case, you've already traded on the first two pullbacks. The third pullback, fourth pullback, they get decreasingly effective. Um, so here we were trading it for a break of the high of day strategy. We created this high. I was seeing a breakout. I was anticipating the breakout, so I got in a bit early. I should have set my stop loss to. Honestly, I probably should have set it for slightly. I'm trying to figure out where I want to set my stop loss in during a breakout. So during that candle, I could have set it down here. You could have set it right here. Could have set it at 70% of the initial. That's what I'm going with right now. Um, but if I had kept to my stop loss rule, I would have remained in the trade for a huge move up. So that's something that I'm learning as well is before you get into a trade, it's so important to start off with your stop. So this is the set strategy that Carlos teaches. He teaches have your stop, your entry, then your target. If it makes money, it makes money. But the whole job of a day trader is risk management. You need to know how exactly where your stop loss is and how much you're risking. And it can only be max 2% of your entire account, and the actual investment amount is 10% of the entire account. So that is just a fundamental rule that all the market wizards teach. And you will avoid many, many losses by just focusing on your stop first. You have to focus on your stop. You have to know where you're going to get out and how much you're going to get out at. Because all we're doing is preserving capital. If the thing wants to move up, that's great. But if not, we're protecting our capital. So fundamentally here, we are risk managers and protecting our capital. All right. So this was a break of high of day, anticipated the pullback. 5 minute is great. You can anticipate it, but you set your tight stop, you get out. So next, I had this was again a break of high of day that I got in as it was breaking again. We set the stop to the low of that candle. We rode this thing out several times. We had a bull flag right here, which I love because it's very low volume. Not very low, but about half of that initial move up. Doji, perfect. Next, we had another bull flag right here. This is the most textbook type of pullback we can get, guys. This is discussed in VPA analysis. This, guys, look. This is perfect. Great bull flag. Two dojis, decreasing in low volume, long lower tail. You get in on an entry right here and right here. Low, long upper wick, so that means they're closing at their top and there's not too much manipulation. Then you write it again, which is what I did here. I got in literally right here and right here. Rode this thing up, wrote it up. I should have set my stop for the low of this candle and I would have stayed in. So on the 5 minute, we're moving our stop up to the low of the next candle. So put stop at the low of the new candle created and respect that. Because on the 5 minute, if we get a new, while we're still making higher highs, we're obviously still in an uptrend. But as soon as we make that lower low, then that's a sign that we want to get out on the 5 minute. This is why the 5 minute is so good because we can trust it and you don't have to really think about what's under the hood here. Like look at the 1 minute. The 1 minute, like look at this, guys. Like the 1 minute had so many bullshit signals. That long upper wick right there on high volume, stupid signal. You would have just not even traded that, right? Then we've got this strange pullback, and then boom, series of 1 minute. Yeah, guys, I'm telling you, 5 minute is much more effective. If you're here on the same track with me, try that out. Just stop trading the 1 minute, stop trading the 2 minute, use 5 minute. You'll get way less signals, way less confirmation, but you're making much better trades. Less trades. To trade, I mean, I went from trading. So I took 11 trades, 8 trades, 7 trades, like 16 trades. Now, 1, 2, 3, 4, 5, 6 trades, and we're good. So that was great. Yeah, so big changes for tomorrow is I'm adjusting my stop level. So when things are working well, we move the stop to the low of the candle, the breakout candle, and respect it. First focus on the stop before trying to figure out to make money. So fundamentally, we're preserving our capital. Bull flag strategy automatically gets removed, no go, if we see a bear trend candle in the 5 minute or a shooting star with the high volume. If it's low volume, then no. Um, and green pre-market analysis requires that we have a bullish trend plus relative volume greater than 5. Only trade bull flag the first 1 to 2 pullbacks. Um, be aware of long upper wicks on 5 minute to the left. And another thing is on entries, use stop for entries because that means I have a plan. If I have time to put a stop trigger, that means I've thought about the trade and I have a stop loss as well. So I'm really happy with how today's trading went. Um, a couple days ago, I had a huge loss in futures, but the reason is I didn't set my stop. I didn't have a plan. I traded purely on news and on impulse, and that was a lesson that I will never forget in my life. Is fundamentally, guys, for any type of decision you make, you want to weigh the consequences if it doesn't go in your direction. Which there's a quote that if it can happen, it will happen. It's Murphy's Law. Anything that can go wrong will go wrong. And this applies to trading, it applies to everything, but and in any type of decision you make, even if you think you've got it all figured out, you've got it 100%, if it can go wrong, it will go wrong and it'll go very wrong. So you want to take a second to figure out what is worst case scenario of said decision, and then put around risk mitigation for that particular event, because you don't want to have that really bad consequence happen. Another thing I'm learning from thinking in bets is the 10-10-10 rule. Will it have 10-minute consequence, 10-month consequence, or 10-year consequence? And based on that, you decide on how much time you want to spend or how much risk you want to put involved. If it's something that's going to cost you 10 minutes, you may not be super strict on your risk, but if it costs you 10 months or 10 years, then you want to sit down and really weigh the consequences and making sure that your risk is managed. All right, guys. Hope you learned something today. Hope you have a good one. Bye.